Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As you can see, I'm still up in the mountains, and gosh, it's cold up here. I hear that there's going to be a pretty good storm over the weekends up north, so I guess we'll be happy with what we have. When you take a look at the screen here, you'll see the stocks that will be featured in this report. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature on the recording. All right, let's take a look at the chart of the markets. So we moved to the upside today, and you can see we're kind of hovering around those highs from December. We'll talk more about that in a minute. We did have some economic news this week. Yesterday, we had this CPI report that came out a little hotter than expected on the headline number. The core was in line, but that sent a little bit of shock into the market, at least at the beginning of the trading day. But today we had the PPI report that came out. That's the producer price index, and it was kind of tame. So a little bit of separation there, and that can be viewed as a good thing. If you're not familiar with those reports, the PPI report, take that as wholesale prices, and the CPI report as retail prices. So if the CPI is up a little bit and the PPI is down, that actually creates more spread for companies to generate a gain. So that could be viewed as a good thing. And as we go back and take a look at the chart of the market, you'll see how yesterday we were trading down a bit, but then rallied into the close. Kind of the opposite today with the PPI report. We opened higher and then traded lower. Didn't close necessarily on the low of the day. Will we close kind of in that range? One thing I wanted to show you is switching over to the weekly chart. We haven't looked at the weekly chart in a while. So if we look at that, we had a comment from Jeffrey Gundlach, who I put a lot of faith in from the bond market side of things. His calls are much better on the bond market than the equities market, but he noted that he feels like we may be having a double top right through here. Now, we talked about this Tuesday night during our Trade Finder. And by the way, if you're not familiar with it, we do Trade Finder every Tuesday night at 9 p.m. Eastern Time. You can register with the link on your screen there. It's free. We talk the markets. We look for trade ideas, and we have a live Q&A at the end. We have a great community with Trade Finder, and love to have you join if you haven't already. I think you'll find it a worthwhile use of your time. All right, so back to this chart on the weeklies where Jeffrey Gundlach was noting that, hey, I think we have a double top in the market. So that first high is back in November of 2021, and that's exactly where we are now. We have snuck into that tap box where the target price is for the Wave-5, and so you have to start to wonder with the resistance from the highs back in the end of 2021 and where we are now, is he going to be right? Is this going to be major resistance for the markets? We're going to have to wait and see how that plays out. But as I move back over to the daily chart here on the S&P, you can see where that red line is. That indicates the resistance level from the November high on the weekly chart. And we do have a Wave-5 forecast that's a bit higher here if we can break through this 480 level. And I think this is where the shorts are going to try to make their stand. So the market may have a little difficult time breaking through there, putting the 10-day moving average on. You can see we're kind of running right along with it. The key being that we're above the 10-day moving average, which that's a positive. If we can break above 480 with a follow-through day, the shorts will cover, and we might get that run up to 490, 495. And if we get that high, I can't imagine that we don't go up to 500, but we have to break above this 480 level with follow through first. Can we do that? Well, when we take a look at the TNX, the 10-year interest rates, what I found really interesting was yesterday, even with that slightly hotter than expected CPI, rates were up early and then traded lower throughout the day, closing near the low of the day. And once again, lower rates today. So I find that interesting because I feel like the CPI report gives the Fed an opportunity to wait a little longer on the rate cuts, which I've thought they're going to be late to the party anyway on cutting rates. But it doesn't seem like the market views it that way, moving down in rates with a hotter than expected CPI report. surprised me a bit. I kind of thought we'd finish a little higher. As I've mentioned before, I don't really see the catalyst for a run like this in the interest rate category, the wave 4 being right at the edge of disqualifying this 5-wave pattern. But to tick down with those reports, little surprising to me, but that's certainly a positive for the markets, you would have to say. So I do feel like we will disqualify this 5-wave pattern, but is that enough to get the S&P above that 480 level? When we take a look at the dollar, it's just kind of hanging around. It's not doing much. I'm not going to spend a whole lot of time on the dollar because I talked about it in the past, but just as a quick reminder for those that may be viewing for the first time, my viewpoint, for whatever that's worth, and the market doesn't really care what I think, but I like to share it with you anyway. The range here on the dollar, kind of the sweet spot, is from those highs around 107 down to a low of 96. I wouldn't want to see the dollar go below 96 because I think that would mean that the global economy is starting to have a little concern about the debt level that we have. So you can see that although we're in a qualified 5-wave to the downside pattern with that wave 4 right at a fib level at 38%, the 38.2% level, we're pretty much in the sweet spot. And even if we did drop lower in the dollar down to where this wave 5 is forecast to go, we're still in that range that I feel is constructive as far as the potential for the market to move higher. Looking at the VIX, and same old story here, the old Led Zeppelin thing. Song remains the same. Here we are just hovering around that 13 level. In the past, when we got to 13, we had these moves to the upside. But since we came back down here in the mid-November area, we've just had these little small spikes, just enough to give a little bit of rally to bring us back down. Now, if I put the Elliott Wave pattern on, and yes, Elliott Wave does work on the VIX. It is a chart pattern. It shows the potential to move lower on the VIX. Can we do that? That certainly would move in line with the market breaking above 480 and heading towards 500 on the S&P. But it's got to do it first. And so far, it just can't seem to significantly break that level. We've gotten down to 12, but we can't really seem to go below 12. We have had readings that low on the VIX in the past, but can we get there again? We'll have to wait and see. Or is Jeffrey Gundlach going to be right? And we're double topping in the market, and we're going to start to see more volatility and a move higher in the VIX. It'll be really interesting to see how that plays out. Well, we certainly have to take a look at the chart of Bitcoin this week because it's been in the news with the Bitcoin ETFs that are trading now. And as you can see, yesterday we had a big move above 49,000 for the first time in a while. But then we closed near the low of the day, and there's been a lot of chatter. Is this a buy the rumor, sell the news type of thing on Bitcoin? In fact, at the time of this recording, we're actually trading below 44,000 down in here. But that brings us right to where we were with this triangle pattern. And if you're familiar with Elliott Wave corrective patterns, flat zigzags and triangles, we've talked about it before. Oftentimes when you break out of a triangle, you retrace the breakout. And that's what Bitcoin is doing right now. Now, if it doesn't hold right here, well, then we'll have to look down here under 40,000, kind of in the 36,000 range where we had this small ascending triangle. That would be right around where the wave 4 is targeted if the wave 4 was to begin today. For those of you that might be newer, these are not saying that the wave 4 is underway. These are projections from the Elliott Wave algorithm. By the way, this software is the software called Profit Source from the Hub organization. We talked about this on the Hub Financial live show earlier today. And if you haven't already, go over to Hub Financial on YouTube and subscribe there, and you'll be able to attend our live show that we do every Friday. But what this means is if the wave 4 were to start, this is where you could expect some support, which is right where this other triangle was. But we have to get there first. So we could hold right here. We do have that potential run into the halving in April up around 50,000, which is a target here. And another reminder with this wave 3, the Elliott Wave algorithm likes that price. Sometimes it runs up there in the wave 3. Sometimes it corrects first and then goes to that targeted level. But for whatever reason, the Elliott Wave algorithm likes Bitcoin at 50,000 at some point in time. But notice where this is. The time frame here is right in April, which coincides exactly with the halving. Ethereum is off and running. Maybe we'll show that chart next week. In fact, it's a bit overbought at this point in time, so it hasn't had the same kind of back off that Bitcoin has. But Coinbase certainly has had a move to the downside, as a lot of people are saying having these Bitcoin ETFs trading is a negative for Coinbase. And if you're long Coinbase or want to be long Coinbase, you didn't want to see this break below 140. We even talked about that last night in our insiders meeting, which is for all of our alert subscribers only at ewotrader.com. We wanted it to hold 140. Well, it didn't do that today. It broke below it. If we get follow through on Tuesday, again, another reminder that the markets are closed Monday, then we may be looking at Coinbase coming down here into the 115 range. And if it doesn't hold there, all the way back, which would retrace the entire move down here around 80. But we got to get to 100 first and 110 before we start talking about any potential move down to 80. But that break of 140 today is significant. It does seem like it wants to come down to that 110 level now. But we'll see on Tuesday. Can we break back above 140? Then it's no harm, no foul. But if we get follow through, I think it's highly likely you'll see 110 on Coinbase. So where would an entry be? I think you could take a shot at 110. We're at a 46% corrective move now. That would bring us down to about a 61.8% level here, down around 110, which is a very strong fib level. Maybe we bounce at that point in time. The algorithm still likes a higher price in Coinbase. So maybe this is just noise from all the chatter with the fact that the Bitcoin ETFs have started trading. But I think you got to hold your nose and expect, if we don't get back above 140 on Tuesday, you're probably going to see that 110 level. Looking at some other stocks of interest, let's look at the USO in general. And then when we do these US market updates, all you have to do is leave a comment underneath the update. We are giving away one of our level 3 subscriptions, which is worth thousands of dollars, 3 different portfolios of sending out alerts, directional, non-directional, and our AI-based sideways strategy. I do read each of those comments and I answer as many of them as I can. But when you leave a comment, you're registered for a drawing, and we're going to do one every single month this year. So please leave a comment underneath the chart. And so when we look at oil, it's in a really well set up 5-wave to the downside pattern. We tested 70 today, but it looks like we may go lower here on USO. And one of your comments in last week's recording was on XOM. So again, I read them all, and we rotate them around. And time effort, we can't show every stock, but we rotate these. Also, a very well set up 5-wave to the downside pattern. And if oil can catch a bid, hard to imagine that XOM is going to. It looks like we might break that wave 3 low from December and head all the way down to somewhere below 95 here on XOM. Now, it's going to try to hold 100. As you can see here, it broke below it a little bit there in December, but was able to rally above it, but just up to resistance at 105 and then back down. Again, we'll see, do we get follow through next week to the downside, or can we hold this wave 3 low? But without some help from the USO, I just don't see how we get much of a bid into ExxonMobil. They both look pretty bearish to me, at least at this point in time. Tesla, everybody's asking about Tesla, and I think we nailed this one last week. We're not in a 5-wave pattern. As you can see, nothing's labeled there. And in last week's update, we said, hey, if we can't hold this 240 level, which we need to hold, we'll probably see 220 in a short period of time. And boy, did we. Just this week, right down to 220. So we nailed this one spot on. Now, the question is, what happens from here? If I put the 10-day moving average on, you can see we're a little bit oversold now on Tesla from the 10-day moving average. Can we hold 220? There's not a whole lot of support here. There's a little bit. But if we can't hold 220, then we're going to likely see all the way back down to 200 here on Tesla. I know that doesn't make the Tesla bulls happy, but that's what the charts are showing. And you got to trade what the charts are showing, not what you think's going to happen. We do have a negative here with the 10-day moving below the 30-day. That's the fuchsia line here. The blue line is the 50-day moving average. We are a touch oversold, but can we bounce from here? If you're looking to go long, boy, you got to get back above 240, I think, before you can feel comfortable going long. And even with that, you can see that we do have a pattern of lower highs here on Tesla. So I feel like without some sort of a significant bounce, other than just maybe being oversold and correcting a little bit to the upside here, we may very well see that 200 level on Tesla. So breaking above 240 would be kind of an aggressive entry. I think, I like to give both the aggressive and conservative side. For me, on a more conservative entry, to go long Tesla again, you'd want to see a break back above that 260 level. That would feel more comfortable, and then maybe we can take on some of these lower highs here. But for now, looking a bit bearish on Tesla. We did have JP Morgan, the first of the big banks, to report today. They had a charge off that kind of hurt them. The other earnings, the rest of the earnings report was good. You can see that we opened higher and traded higher early and then closed at the low of the day, right back down to this 170 level. But we've got a whole slew of bank earnings to come out next week. We'll see how they all play out. And we did manage to stay above the 10-day moving average even with this move lower here. So perhaps we're just testing 170 on that big charge-off news that they had, and maybe we can hold 170 and make a run back up towards that 185, 190 level. But do we get follow through back below 170? If we trade and close below 170 next week, then I think you have to start looking at 160 on JP Morgan, and that's an area of potential support. Also intersects where that 4 would be forecast if we do indeed start a wave 4 lower. But so far, okay on the banks. We got a little bit overbought on the high. We came down, so staying above 170, I think you're long. You break down below 170, I think you're going to see 160 on JP Morgan, and then we'll have to reassess things and see how that plays out. Now, we hadn't looked at the INDA here in a couple of weeks. Look at that. It just continues to power higher. Where we used to have on the EWG, when we look at Germany, we keep having these wave 5s that would relabel to wave 3s on the downside. We have the exact opposite here on the INDA. These wave 5s to the upside keep relabeling to wave 3s, and you see that move higher. Really just super impressive chart here on the INDA for our friends in India. Whether you're trading the INDA or the Nifty, we had this big run starting in the spring, March, and just consolidated sideways for a few months and then took off on another run. That's exactly how you want to see these patterns play out. If you're long, when you get a big run like that, it consolidates the run and then takes off again. How high can we go here on the INDA? Well, there is a forecast high up around 54. And again, as I mentioned earlier, that can be a corrective move in the wave 4 first, then a move in a wave 5, or that wave 3 can continue up towards that level. But you just have to be impressed nonetheless in what's occurring in the INDA Nifty. The India market has just been on fire for the better part of this year. And then last but not least, we had a request to show Brazil. So here's the chart of Brazil. We have this support area here around 34, which intersected with the highs back from July. And we tried to break above it. It got a little vertical. I don't like the vertical stuff. What goes vertically up often comes vertically back down, which is exactly what happened here. And we kind of held this area so far, at least there at 34. And if we can hold 34, where all this support is, what was resistance is now support, then perhaps we can move higher in Brazil and perhaps some of the other Latin markets. And so far, so good. However, we break below 34. We have a little bit of support here at 33, which was the wave 3 high back in June. So kind of a corridor of support here between 33 and 34 on the Brazilian market. But if you break below that, all bets are off. then we're looking maybe at a move back down towards 30. But once again, we have to do that first. So that's ahead of the game. We'd have to break below 33 before we start getting concerned about that. There's just not much to support the Brazilian market on a break below 33. But so far, we're holding above 34. So perhaps we can continue to move back to the upside on the Brazilian market. So that gets you caught up. Hope everybody enjoys a great holiday weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.